Very good morning. Beautiful Saturday morning. So very good morning to Kirti, Venkat, Sakshi and all the students who have just got up right in the morning to hear the costing lecture. So today we'll be doing a subject topic, marginal costing. Very interesting topic. The weightage of the marks is essentially 5 marks. Question number 1, you may have one part of 5 marks of marginal costing. Else it can be a part of some other question, B part, so it could be like for 8 marks or so. But most importantly, why do we need to understand this marginal costing? Because when you go down to CA final, the only topics which go with you when you talk in terms of topics is marginal costing and standard costing. So marginal costing, in the aspects of marginal costing, the fundamentals which you have understood in marginal costing is going to go a long way with you, right? So on this note, let us start. Okay, Shivangani, I can see a question you have asked me. That is question number 3 of service costing. At around 9 o'clock, once we are done with marginal costing as a topic, we have covered the most of it, we will take doubts for the previous topics. Okay, so today let us start with marginal costing. I'm sharing the screen with you. And the topic's name is marginal costing. Now, for studying this particular topic, all of you should have it into your mind that what is it that ICAI is actually dividing or wanting you to know. First, ICAI wants to know that, do you know the difference between marginal and absorption costing, or what I could say vice versa? Then, of course, the calculation part, the mathematical part we'll be doing. We should be ready for doing almost all sums which ICAI has given. So we'll be doing the calculation part, what marginal costing is. And third, the practical usage of it. And there I put in the concept of limiting factor. So this is how I divide the understanding of marginal costing. That is, these are the 3 things which I should know when I am actually starting to read the subject marginal costing. So first, let us get into the concept that what is the meaning of the word marginal. You have heard this word earlier in economics, wherein marginal meant the additional. This is how we all understand. That is, what is the cost of producing that additional unit? So that was the meaning of the word margin. Whatever we studied in economics, we carry forward the same thing. Yes, here in costing also, the term marginal costing and helps us in decision making. I need to take up a call that, is it worth producing one more additional unit? No? Is it worth producing it on your own, or is it worth taking it from the market, buying it from the market? Is it worth of giving it at a lower price in some other market? It also helps me in order to price the product in times wherein it's like you're working at 50% or 60% of the capacity, you have spare capacity, and you definitely are not getting the work from the market in which you're operating. So is it possible for you to give different pricing in a different market? No. So basically, marginal costing is a tool for decision making in cost accountancy. And yes, it means what is the cost of producing one additional unit. So now let us understand what we had studied till now. Whatever we had studied till now is technically known as absorption costing. Why absorption costing? Just go back to your cost sheet and just let's look into it. The cost of a product meant direct material, direct labor, which was the prime cost, and then a lot of expenses which were technically known as overheads, whether at the stage of factory or admin or selling, they were being incurred. Now, this cost sheet or the cost of a product you are doing not once the product has been sold. We need to do costing at the beginning. We need to price cost a product at the beginning. Then only I can determine my selling price. So for this purpose, all of us read about overhead absorption rate. All of us read about overhead absorption rate, which could be on the basis of traditional method, which was machine hour or labor hour, or it could be on the basis of ABC. But what we were doing is we were actually absorbing the overheads, whatever expenses were going to be incurred, we were calculating them, finding out that what is the normal capacity or what is it that I'll be capacity at which I'll be normally working at, finding out an overhead rate. If it was traditional costing, I was using machine hours as a basis. If it was labor costing, I was using labor hours as a basis. I was absorbing the overheads, and once that overhead rate was determined, I was adding it to the cost of the product in order to find out the cost per unit. And if I was using ABC costing, I was determining it on the basis of the cost drivers. And once these overheads rates were determined, I was just adding them up, finding out a per unit cost. Now let us understand what could be the problems while doing it. So to understand that problem, I will take up a hypothetical sum in order to understand. So I clear my screen. Let us think that for producing a product, my direct material I need is ₹2 per unit. I need direct labor or direct wages. I require 1 hour to produce 1 unit, and I need to pay at the rate of ₹3 per hour. So my labor rate is 3. ₹5 is my prime cost. Then I had my factory overheads, right? I had my factory overheads, which were around, let's say, 75,000. Of this, let's say 50,000 was variable and 25,000 was fixed. Similarly, I am going to do a lot of expenses at admin overhead stage. Let's say the expenses were like, say, again, 50,000, of which 40,000 is fixed and 10,000 is variable, right? Let us have this assumption. Now, these are going to be my overheads. Now all this variable or fixed or whatever overheads I've calculated, we have studied that we always work out on our normal capacity. Now normal capacity, I think I explained this word at the beginning. I reiterate what I mean to say, and that is I calculate that, okay, there can be a maximum capacity, which is the maximum hours or the maximum units which I can produce. There could be minimum, but normal is something which I will be working throughout the stage of my production or selling or till the time I'm operating. So on that ground, let us say I calculated that I would be producing or working for 50,000 hours. This was my normal capacity. I calculated this is going to be my normal capacity. Right? Okay. So let us absorb overheads on the basis of this normal capacity. Okay. So I'm doing it here. Factory overheads, fixed and variable. Fixed is 25,000 divided by 50,000 hours. So my rate came out to be 50 paisa, right, per hour, 0.5. And variable is 50,000 divided by 50,000 hours. So my rate was 1 rupee per hour. Similarly for my admin, fixed is 40,000 divided by 50,000. It should be 0.8 per hour. And variable is 10,000 divided by 50,000. It should be 0.2. 10,000 divided by 50,000. It's going to be 0.2, right? Okay. Now, this is what I have calculated, that this is going to be my overhead absorption rate. Anybody, any problem here? We are very clear that what is my absorption rate. I have calculated it beforehand. Okay. Now, I told you at the beginning that it requires 1 hour to produce 1 unit. To produce 1 unit, I require 1 hour. So I do the costing of my product, and on that basis, my factory overheads, if I absorb, it will be on the basis of variable is 1 rupee per hour, fixed is 50 paisa per hour, that means 1 rupee 50 paisa, 1 unit, 1 hour, so 1.5 I add. Similarly, I add the admin overhead, right? Admin overhead 80 paisa per hour for fixed, 20 paisa per hour for variable, so it becomes 1 rupee per hour. So I add that. My cost of production, my cost of producing a good would be 7 rupees 50 paisa. 7 rupees 50 paisa. Now in this, I will add up my selling overheads. Now let us say they were 2 rupees per unit. So my cost of sales becomes 9 rupees 50 paisa. And I decide to sell my product at a profit of, I decide to sell my unit at 10 rupees. So difference is my profit. So let us assume my selling overhead to be 1 rupees 50 paisa. So if my selling overhead happens to be 1 rupee 50 paisa, my cost of producing the good is going to be 9 rupees. 7.5 plus 1 rupee 50 paisa is going to be 9 rupees. And I'm selling my product at 10 rupees. So my profit is going to be 1 rupee. Anybody, any problem? So if I just write it down, if I rub this, then if I say my selling overheads are going to be 1 rupee 50 paisa, the cost of a unit is going to be 9. If I sell this at 10, then 1 rupee is going to be the profit. This is absorption costing, wherein I try to find out the cost of a product per unit. I try to find out the cost of the product per unit. This I'm doing it by adding up all the fixed and the variable costs which I'll be incurring for the purpose of producing those units which I have pre-decided. That is, I have pre-decided that I'll be working at my normal capacity of 50,000 hours. And it takes 1 hour to produce a good. So I had determined that I'll be able to produce and sell 50,000 units. And that's why I did all my calculations as per those 50,000 hours. Now here the most important thing is that basically variable overheads I incur when I produce it, but fixed overheads technically have no connection to production or to sales. Fixed overheads, if I rub the board, please, if I rub the board, right? We have the cost here. Okay, I'm not rubbing the board because I'll try to show you that what will happen if I do not work as per the capacity which I've determined. So what I'm trying to tell you is that basically the fixed costs, though I have added up for the cost of production, I've absorbed all the overheads on the basis of my normal capacity. But the question here is, do fixed costs have any nexus with the production and sales? The answer is no. There is no connection with production and sales of the fixed costs. They are period costs. Fixed costs are period costs. Whether I produce 1 unit or whether I produce or whether I work at 100% of my capacity, fixed costs once incurred will remain the same for that given capacity. If I decide to produce more than that maximum capacity for which those fixed costs were incurred, I need to incur the fixed costs again. For example, if I have 1 factory unit, I am operating at, with 1 setup, and, the rental of that place, the number of people I'll be requiring on road, everything is, will be fixed for that. If I require a place which will be like 1,000 square feet and I have to pay a rental of 40,000 rupees a month. Now, whether I produce 1 unit or whether I work at 100% of my capacity, the rental of that place will remain constant. So fixed costs are period cost. All this you have studied at the beginning, at the first lecture, whenever you must have studied you started out with your cost. So fixed costs are period costs. They have no nexus with production or with sales. On the other hand, variable costs are the marginal cost. Variable cost, I can use the word, they are marginal cost. Why marginal? Because every time I produce a unit, I need to incur these variable costs. I need to incur these variable costs, right? So, okay. Just a second, guys. I can't see the board of where the students interact with me. So I'm just logging out. Okay, I can see it now. Okay, so Are we clear with this? Are we clear with this concept that variable costs are actually going to be incurred whenever we decide to produce a unit, but fixed costs have got no nexus? Okay. Now let us see, we have made this cost sheet assuming that we will be working at 50,000 hours capacity. That means we will be producing 50,000 units. Now, if at all we produce 40,000 units, actually we produce 40,000 units. If I put it, actual production is 40,000 units, and we actually sell some 30,000 units. Let us see that what happens. Okay, let me look at the question. Why we absorb fixed cost on the basis of normal capacity? Mansha, when we did overhead absorption, what were we absorbing and how were we absorbing our overheads? We were absorbing overheads on what basis? Can you tell me, Mansha? The question asked is that why are we absorbing the overheads on the basis of normal capacity? So my question is, when we did overheads and we were calculating a machine hour rate or a labor hour rate, we were dividing in order to find out an overhead rate by what units or by what hours. Was it maximum hours? Was it actual hours? Was it minimum hours? What were we dividing? Ansha, can I have the answer? I know the screen goes off, then if at all you can answer me, I'll be happier. Okay, till the time I get an answer from the student who has asked, we were dividing it by normal capacity. We are always, in order to find out our per unit cost, in order to find out for the purpose of absorption of overheads, we are always dividing the expenses by the normal capacity, right? So that's what exactly I did. Now I'm saying, what is going to happen if I actually do not work for 50,000 hours? And that is why, so Mansha, you have answered your question, right? Nilofer, no, we never do it by actual hours. Nilofer, okay, that means somewhere something is wrong, Nilofer. If you please go back to your basics of cost accountancy, you will understand why we are all studying cost accountancy as a subject. In the beginning of cost accountancy, it has been written that we are all studying cost accountancy for the purpose of pricing a product. Now, for the purpose of pricing a product, you don't price a product after you have sold the product. You need to do it before you sell the product. Am I right, Nilofer? Right? Though I have not taught you all that, but I took up your sessions from overhead, but that is the first thing which all of us study. That is, why are we studying costing? We are studying costing for the purpose of pricing. For the purpose of pricing, we need to do the right costing. And that is why the first chapter or the first thing which is taught to you when we study costing is what is a cost object, what is a cost unit, right? We understood that what are the ways in which different a product comes into existence. We talked about service industry, we talked about actual production, we talked about actual manufacturing industry. There are so many things which we need to cost, whether it is a service or whether it is a product. And for the purpose of costing, we talked about that, okay, every product is made up of, or any service cost or any product cost is made up of three elements. One is material. The second element has to be the direct labor which was involved into the production. And third aspect is all the other expenses which are happening inside the organization, whether at the factory stage or at the admin stage or at the selling stage. I need to absorb all these overheads on my unit of cost. That is why we were identifying which is the cost object, which is the cost unit. We talked about cost center, we talked about responsibility center. All that is done, Nilofer. Right? So, guys, we don't do it by actual hours. In overhead absorption, we studied about what are the reasons of underabsorption and overabsorption. What was the meaning of underabsorption and overabsorption? That is, we had decided that we'll be working at so-and-so capacity. This was my overhead supposed to be incurred, but we actually worked for so many hours. So then we were trying to find out that, okay, if we actually worked for these many hours, still why were we not able to recover the expenses? And we were trying to find out that what were the reasons. So abnormal reasons is we did a defective planning, we did not decide properly, and that is why we could not work as per the capacity which we had decided. And the other reasons which were not in our hand were the overheads being incurred are being more. Maybe there's a sudden surge in the prices, or some kind of policy which has come in because of which expenses have risen up. So if the reason was normal, we were increasing our overhead rate. But if the reason was abnormal, we were saying that, okay, this needs to be put into costing P&L. All this you have studied, right? So I am just reiterating whatever you have studied. So in these 5 minutes, I reiterated all what we have studied. Okay, so getting back to what we were doing. Now, let us say we actually work and we actually produce 40,000 units and we manage to sell 30,000 units. What is going to happen? So let us do it. Let's make a cost sheet. Let's make a cost sheet and try to calculate. Okay, so I make a cost sheet. So my direct material would be how much? 2 into 40,000. 2 rupees into 40,000 is 80,000. My wages are going to be 3 into 40,000 is going to be 1,20,000. So it is 2 lakh rupees is my prime cost. I'll add up my factory cost, my factory overhead, because I need to find out my per unit cost. Okay, so they were 1 rupee 50 paisa. So I add up those 1 rupee 50 paisa to these units which I produced. So 40,000 into 1 rupee 50 paisa, which is 60,000. So 2,60,000. Now, since I did not manage to sell all my goods, let me subtract the closing stock. Let me subtract the closing stock. The closing stock is 10,000 units because I managed to sell only 30,000 units. So 10,000 units into what is the cost per unit. Now all the expenses have been charged till here. That is material, labor and factory. Right? So which is 6 rupees 50 paisa. Or you can do it like this. 2,60,000 is the cost of 40,000 units, which is 6 rupees 50 paisa. So what will be the cost of 10,000 units, which is going to be 65,000. Right? Marginal, Alok, I did not understand your question, dear. Marginal and absorption costing logic 1, ma'am. I did not understand your question, Alok. I have still not started teaching you marginal costing. Right now I'm teaching you absorption costing. Something which you have been doing, Alok. Alok, please look into whatever you have studied till now. You have till now studied actually cost sheet. For the purpose of making a cost sheet, what were you doing? You had material, labor, and whatever overheads were being incurred, you were absorbing those overheads on a normal capacity, absorbing it on the units and finding out per unit cost. Why are you doing standard costing? I know you people have done standard costing. So what did standard costing mean? Standard costing meant that if this is the standard cost of producing a product, is there any deviation with the actual what I have done? Right? You're trying to find out the variations. So the question is, how is the good actually first costed? It is costed at sitting at, at the beginning of the year, you decide that, okay, what are going to be your material, labor, and how will you absorb your overheads and find out the per unit cost. Once you've found out your per unit cost, that's your standard cost at which you decide to sell. You add up a standard profit which you want to earn, and you decide that, okay, this is the price at which you will be wanting to sell that product. But actually, you may not be incurring what you had pre-decided. You may not be selling at what you had pre-decided, and that's why you are reading standard cost. So I hope, Alok, I have been able to reach up to you, right? Nisha, what is the cost till the factory stage? You can actually see from here, 2 plus 3, 5. 5 plus you add up the admin cost is 1 rupee 50 paisa, right? Or you can do it from here. 2,60,000 is the cost of how many units? 2,60,000 is the cost of how many units? It is the cost of 40,000 units. I am doing the costing for 40,000 units, right? So if 2,60,000 is for 40,000, how much will be the cost for 10,000 units? 10,000 is my closing stock because I actually produced 40,000 units, but I actually sold 30,000 units. So if you want to find out the profit which I've earned by selling these 30,000 units, you need to calculate it. Okay, so I hope I am clear. Okay, so the cost of units which is sold, so cost of sales is how much? It is 1,95,000, right? Or you can say cost of goods sold, because I need to still add, I still need to add my selling expenses. Now I add my selling and distribution expenses, which is 1 rupee 50 paisa. So 1 rupee 50 paisa is for 30,000 units, which is 45,000. So my cost of sales happens to be how much? 2,40,000. What is my sales? I have decided to sell my units at 10 rupees. This was the selling price which I decided. So I'll be selling it at 3,10,000 rupees per unit. So what is going to be my profit? My profit is going to be 3 lakh minus 2,40,000 is going to be 60,000 rupees of profit. Right? Okay. Now let me look at the questions. Lalita. Okay. Lalita has said, ma'am, we should not take admin overhead here. Guys, time for you to go back to your cost sheet. If you remember your cost sheet, their institute has been very clear. I think you need to look into your basics, all of you. In the cost sheet of ICAI, all of you turn the pages and you realize institute has very clearly mentioned that if admin overheads relate to production, they'll be a part of cost of production. But if admin overheads are general in nature, they will be added up with the selling expenses, right? So you cannot take up a strict or a rigid opinion that when it is administration overheads, I will not take. You could ask me the other way around that, ma'am, are these admin overheads relating to production or are they general in character? If they are general in character, they will be selling and distribution overheads. That means they'll be added here. But if they are relating to production, they should be added here. I am shocked here that why all of you are asking me that why admin overheads have to be added. I would request all of you to go back to your cost sheet. Institute is being very, very clear that administration overheads which relate to production. Now here when I was doing it, I did not say that they are general overheads, did I? So I can always assume them to be relating to be a part of production. So I think I've answered your question. I've answered your question. If yes, please tell me yes, because now I move up to the most important step, my step of reaching towards marginal costing. Now this is what I have done is a cost sheet. I have made a cost sheet as per absorption costing. I have absorbed all the overheads, right? Whether they were of fixed character, whether they were of variable character, I have absorbed all the overheads on the units which are produced. And because of that, even my closing stock, that is 10,000 units, which I did not manage to sell, is having a portion of fixed cost in it, because each unit is being priced at all the variable and the fixed cost incurred till the stage of production. Am I good? If yes, please tell me so that I move forward. Okay, since I get the answer after a lag, I proceed, right? So I hope till here everybody is clear, right? Charu, I think I've answered your question. We do add admin overheads if they're relating to production. And here, when I was doing it, I never told you that those admin overheads are of general character. I hope I'm very clear. If the question is that those administration overheads which are being incurred are not relating to production, then you will not add it up here. Right? Okay? Okay. Okay, but Charu is asking me a different question. She's like, ma'am, you have not added up administration overheads at all. You have not added up administration overheads at all. This is the question which Charu is asking, I think. Right? So, Charu is right. Okay? Charu is right. I have not added up administration overheads at all till here. Right? Right? I have not added up administration overheads. I have only added up the factory overhead. Now you tell me, what do you want to assume? You want to treat administration overheads to be a part of production, or you want to treat it as a part of general overheads? I got busy answering the question. So let us assume administration overhead relating to production, right? That is what I was wanting to tell, but I got swayed answering the question here. So I am treating my administration overheads to be a part of production. So I'll add up the admin overheads. I am not valuing my closing stock till now because admin overheads need to be added up. So they are of 1 rupee, right? So 1 into 40,000, 40,000. So 3 lakh is the cost of producing. 3 lakh is the cost of producing my goods. This is cost of producing. I have treated admin overheads to be relating to production. Now, can I subtract the closing stock? Right, Charu? Thank you so much. I'd actually forgotten. So 3 lakh is the cost of 40,000 units. So what will be the cost of 1 unit? So 3 lakh divided by 40,000 is going to be 7.5 rupees. That means the value of closing stock happens to be 75,000 rupees. So cost of my goods sold happens to be 2,25,000. Yes, right? Yes, Lalita, I got busy answering the question. So I was about to ask that admin overheads you should treat at general or fixed, but I read a question and I read it out and I thought the question asked is we should not add admin overhead at all. And okay, so cost of goods sold is 2,25,000. Now here I will add up my selling expenses, which is 1 rupee 50 paisa, right? Which is 1 rupee 50 paisa into 30,000 units, which is 45,000. So my cost of sale happens to be how much? 2,25,000 plus 45,000 is how much? Is 2 lakh 2,70,000. I'm making a sale at 10 rupees per unit, so it is 3 lakh. So my profit happens to be 10,000. Yes. So is it clear now? Okay. But my question to all of you now begins here. So first thing which we have cleared, administration overheads we will add or we will not add depends upon the information which ICAI will give. If ICAI says this is a part of production, we will add it up for the purpose of finding out my closing stock. That is for the purpose of finding out my cost of production, then automatically it will become a part of closing stock. But if institute says admin overheads are of general character, I will not add them here. I was 1 rupee of profit. I have actually my profit 30,000. That will not be the profit which I would be actually having it in my, cash box. If you like here, okay, and let us see what my actual profit is. And with that, we'll understand how did marginal costing come into existence. That will be the starting point. Okay, I produced 2 rupees into 40,000 unit is 80,000. Wages, 3 rupees into 40,000, 1,20,000. Fixed costs technically have no nexus to production. But your factory overhead had 50 paisa we calculated was fixed and 1 rupee was variable. This is what we had calculated. Yes. So keeping that into mind, that is why factory overhead was 1 rupee 50 paisa. So we add all of these 10. Have some technical issue. I don't know. This keeps on happening because problem. Okay. कंटिन्यू करते हैं ना? ओके जी, शुड आई स्टार्ट? राम जी, should I start? Thank you. Okay, guys, I think the buffering has now been taken care of. The institute was working on it. So, anyways, we got a break of 5 minutes. So, good enough. Okay, I will re-explain everything. So, guys, earlier we had absorption costing when we did the calculation on the basis of a loss, whether at the factory stage or at the admin, what you can say. In fact, let me not use the word marginal costing. I'm like trying to tell that what should have been the real profit. Okay. So going back on that, we have produced 40,000 units. Material wages I calculated. I took up the factory overheads, but I did not take up all. I only took up the variable expense part. I took up the admin overhead, but I only took up the variable part, right? I calculated my closing stock, which came out to be 2,62,000. So when I subtract, cost of sale comes out to be 1,86,000. This is my cost of sales, right? Now in this cost of sales, I add up my selling and distribution expenses. Now my selling and distribution expenses here, though I had put in 1.5 rupees was a selling thousand. Technically speaking, this is the actual marginal cost which I have. This is my marginal cost and selling these 30,000 units. But of course, in order to find out profit, I need to add up all the fixed overheads which I had incurred at whatever stage. So I had incurred 50 paisa admin stage. And both these overlap on the basis of standard, my normal. And that normal capacity was 50,000 units. Buffering. Should I redo the sum again? Okay. I'll redo the sum again. I'm clearing the board. Right. Look at it. Everybody look at it from the start. Okay. I will do the sum as per absorption. Right. Right. And then what should have been the actual profit? I'm calling it by the name marginal. And here I make my cost sheet. So I redo a sum again, right? All of you, right? Now, let us assume that for producing a good, my direct material is 5 rupees. My direct labor per unit happens to be 3 rupees. So my prime cost happens to be 8 rupees, right? Now, guys, there is factory overhead, right? This factory overhead, I have absorbed, right? So let us assume that on that basis, my variable factory and my fixed, this is fixed is being 2. That means my over and my normal capacity happens to be how much? It happens to be, would have been 2 lakhs. Out of this, I have bifurcated, right? Okay. I rub it this. Okay. Okay. My actual production happens to be, let us say, 40,000. My actual production is 40,000 units, and I've actually sold 30,000 units. Yes, this is it. Now, is everybody clear till here? Now, is everybody clear till here? Everybody clear till here? Uh, uh, I know Jamil, but what do I do? I don't know what to do. I really don't know what is to be done. Ramji, can you tell me what do I do? Should I continue taking the lecture? Because students are like, ma'am, buffering हो रहा है. We can't understand anything. उनको वीडियो नहीं दिख रहा है. lecture लूं कि ना लूं, तो मैं क्या करूं? लेक्चर कैंसिल करूं आज का? ठीक है, मैं फिर अब बच्चों का समझ में नहीं आ रहा है लोग, तो 5 मिनट ब्रेक ले लेते हैं. लेट्स टेक अ ब्रेक ऑफ 5 मिनट्स गाइस. लेट्स टेक अ ब्रेक ऑफ 5 मिनट्स. I hope you can hear me now, right? So, कोई बात नहीं, it's okay. Sometimes होता है. This is technology, and we all need to bear it up with us, right? So, Manoranjan, ma'am, I hope your voice is not clear. I hope I'm clear now. So let's start with the same vigor and energy again. Yeah. So this is what the sum I had given you. Let us do it, please, all of you. Okay, right. If I have actually produced 40,000 units, right, and I have actually sold 30,000 units, as per absorption costing, what will happen? The direct material cost is going to be 40 into 5 is going to be 2 lakhs. Labor cost is going to be 40 into 3 is going to be 1,20,000. 3,20,000, correct? Now add up all the factory overheads. Add up all the factory overheads, right? Variable and fixed. Yes, both the factory overheads. So it is 80,000 and 80,000. Yes, I am treating admin overheads to be relating to production. This is something which you need to keep into mind. So I add up the admin overheads also. They're relating to production. 2 is fixed, 1 is variable. Right? Keeping this into mind, this is right, fixed and variable. So 2 was fixed, it is 80,000. 1 is variable, 40,000. So my cost of producing the goods is 3,20,000 plus 80 is 4 lakh. 4 lakh plus 80 is 4 lakh 80. 4 lakh 80 plus 80. Let me just add this up, all of you, so that we don't do any mistake. As such, we could have done it here. 8 plus 2, 10. 10 plus 2, 12. 12 plus 3, 15. Right? So the cost should be 15. Right? Still 3,20,000 plus 80,000 plus 80,000 plus 80,000. Right. So till now it is 6 lakhs. It is the cost of 40,000 unit. I will subtract the closing stock of 10,000 units. So 60,000 is the cost of 40,000 units. So per unit cost is 15. So for 10,000 units, it will be 1,50,000. Yes or no? So my cost of sales happens to be 4,50,000. Yes. Now I add up the selling expense, which is of 2 rupees. So it comes out to be how much? Now 30,000 units into 2 is 60,000. So this becomes how much? 5,10,000. I am going to sell at 20 rupees per unit. That means I am going to sell it at 6 lakhs. Correct? So what is going to be my profit? My profit is going to be 3 rupees per unit, and which is going to be 90,000. It's going to be 90,000. 6 lakhs minus 10, 5 lakh 10. If you'll actually look at it, 20 was my selling price. My total cost was 17. I was earning 3 rupees of profit per unit. This is absorption cost. Whatever cost you decide, on that basis, you add up your profit, you sell the unit. So cost sheet will always be showing a profit. A cost sheet made on absorption costing will always be showing profit. But let us find out, are we actually earning profit? So for that, let's try to do it. Material would be 2 lakhs. Labor is going to be 1,20,000. Yes, 3,20,000. Now guys, don't you think I should add up the factory overheads and that to only the variable part? Why? Because the fixed overhead have got no nexus to production. So keeping this into mind, I will subtract fixed overheads in totality. I will subtract only and only the variable cost. Okay, so I take up only the variable part, which is 80,000. I do not take up the fixed cost. I take up the admin overhead, and again for the admin overhead, I take up only the variable part. Right? So my cost of production comes out to be how much? 4,40,000. So my closing stock will be valued according to this. Yes or no? So it will be how much? 4,40,000 divided by 40,000 units into 10,000 units. So this comes out to be 1,10,000. This is my cost of sales. $3,30,000 is my cost of sales. I add up my selling expenses, 60,000. I have got that, okay, 3,90,000 is the cost at which I'm selling, but this cost of sales is only the variable cost. Yes, I need to add up all the fixed costs, which I have not added up till now. I need to add up all the fixed costs. The cost which I have till now is only the variable cost of producing. I need to add up all the fixed costs. Now there are two fixed costs involved. One at the factory stage and the other at the admin stage. And both these overheads were absorbed on the basis of normal capacity, which was 50,000. That means fixed costs would have been incurred as per this normal capacity. I am producing 40, I'm selling 30,000. Does not mean that I'm incurring less than the normal capacity at which my factory overheads were fixed overheads were calculated. Variable overheads, on the other hand, have got all the connection with production. So they would have been incurred only when you produce or you sell the good. I hope you get the difference. So fixed cost, I should deduct what are actually being incurred. These variable costs are variable costs which have been incurred actually with the goods being produced or sold. So fixed cost, if I take up, it will be how much? Fixed cost at the factory stage was 2 and at the admin stage was 2. So it was 4 rupees of fixed cost and which was absorbed on the basis of 50,000 units. Yes or no? So my total fixed cost would have been 2 lakhs in actual. 2 rupees at the factory stage, that is 2 into 50,000 is 1 lakh. Then at the admin stage again, 2 rupees into 50,000, 1 lakh. So my total fixed cost would have been 2 lakhs. That means 5,90,000 is actually the cost which I have incurred for these 3 lakh units. And I managed to sell them at 6 lakhs. So what is my profit? My profit is not 90,000. My profit is only 10,000. So I hope everybody can now relate to the fact that absorption costing is the best method in order to find out per unit cost. It helps us to price a product. But if I want to know my real profits, it's not a great idea because it will always show me a profit which may not actually be earned by us. I may be earning more or I may be earning less, as you can see in this case. I actually produced 40,000 units and I sold 30,000 units. Then actually I'm not earning a profit of 3 rupees per unit. I'm not earning a profit of 3 rupees per unit. I'm earning a lesser profit because my fixed costs have to be subtracted in totality. So when I do that, I realize that I end up earning only 10,000 rupees of profit, which is like 1 rupee per unit. And this, what I've calculated, is marginal costing. So I'm rubbing the board now. So I've told you the generation of marginal costing. So marginal costing said that we should look into the marginal cost of producing the good, because if we do not produce the goods which we had calculated as my normal capacity, I produce less than that or more than that, or if I sell goods less than what I had actually thought I should be selling, it will give rise to overheads, fixed overheads being under absorbed. And because of that under absorption, I may show a higher profit. I repeat my words. If my normal capacity, I had decided that I will be able to produce and sell 50,000 units, but I ended up producing and selling only 30,000 units, then my fixed overheads are being absorbed only on the basis of 30,000 units. And because of my overheads being absorbed, fixed overheads being absorbed only on the basis of 30,000 units, they are under absorbed. And so the profit which I get is higher than what I actually earn. So marginal cost came into the picture. They said, please calculate selling price and you subtract all the variable costs per unit, you will get something called as contribution. In order to find out your total contribution, contribution per unit multiplied by the units sold. From here, you subtract total fixed costs, subtract it. Then you will get your actual profit. This is what we did in our sheet. Just, yes. Yes, Jamil, what about the value? Stock which was produced. Jamil, what about the value? Technically speaking, when I was valuing closing stock in absorption costing, I was including even the fixed cost in it, right? Due to which a portion of my fixed cost was getting carried forward in the form of closing stock next year, right, Jamil? I repeat what I said. Because of absorption costing, fixed costs were also added up in the cost of production. So we were calculating our closing stock also on the basis of that cost of production, due to which my closing stock, which was being carried forward to be sold next year, was carrying in it a portion of fixed cost in it. And I hope you understand that fixed costs are period cost. Next year again, those expenses will be incurred. If this year fixed costs have been incurred, next year again, fixed costs will be incurred. But in absorption costing, I was carrying that portion of fixed cost with me to the next year, right? And I was inflating the profits of this year. By valuing the closing stock at variable cost, you are only carrying the cost which was incurred for producing those goods. And by subtracting all the fixed costs in the first year itself, you were very clearly showing that fixed costs are period costs. And you were getting the right profit by doing it. So Jamil, I think I've answered your question. So what I did previously was, from the selling price, I subtracted all the variable costs. But by subtracting all the variable cost, I do not get profit. So I called it by the name contribution. The total contribution which I get by selling all the units, from there, if I subtract all my fixed costs, total fixed costs, I get my actual profit. This is the logic behind marginal costing. Has everybody got it? So let us try doing it, that things become so easy for us. Okay, let's take it up. Let us say the selling price of a product is ₹50. The variable cost of producing that good, when I say variable cost, it includes everything from direct material to direct labor to variable factory expenses to variable admin expenses to variable selling expenses. All variable expenses. VC is variable cost. Yes, VC is variable cost, right? Okay. Now let us say my variable cost is ₹9. So contribution per unit is 6, right? Now if I manage to sell 10,000 units, then my total contribution will be how much? 6 into 10,000 is going to be 60,000. If my total fixed cost was 1 lakh, I incur profit or loss of 40,000. Yes. Now, if I manage to sell 15,000 units, if I sell 15,000 units, then what is my profit and loss? Then my contribution will be 15,000 into 6, which is 90,000. I subtract my total fixed cost, which is going to be 1 lakh. I incur a loss of 10,000. Okay, if I manage to sell 20,000 units, then my contribution is 1,20,000 is my total contribution. I subtract the fixed costs of 1 lakh. I earn a profit of 20,000 units, 20,000 rupees. Now look at it, what I have done. Look how easy my work has become because of marginal costing. In absorption costing, I could not have calculated profit so fast. Just a second. Okay. I could not have calculated profit so fast. Absorption costing is good for the purpose of finding out per unit cost. But marginal costing, if you can see, is helping me take decisions. Can you see how? I know that if I am going to sell some 10,000 units, I'm incurring a loss of 50. So I should know that if I start up a business and my contribution per unit is going to be 6, there is no point in doing the business, because you know that I will be incurring a loss of 40,000. Even if I manage to sell 15,000 units, it makes no sense. I know that I need to sell something more than 15,000 in order to earn a profit of right. So basically, just a second, I will. So basically, I have to understand that absorption costing helps me to cost a unit, but marginal costing helps me to take decisions. How? In the above sum, my selling price was 15, my variable cost was 6, so I knew my contribution was 9. And I also knew that my total fixed cost which I'm going to incur is going to be how much? Sorry, my variable cost was, I think, 9, my contribution was 6. And I knew that my total fixed cost is going to be 1 lakh. So I could have calculated that at what point, how many units I sell, I will earn no profit, no loss. If I divide this by 6, what do I get? 1 lakh divided by 6, what do I get? 1 lakh divided by 6, I get out with 16,066.67 units. It tells me that if I manage to sell 16,066.67 units, I will not be earning a single rupee of profit. So this helps me because if I'm deciding whether I can go for the business or not, and I have to look into what is the normal capacity at which I can operate and sell. And I realize that if normally I'm able to operate at some 18,000 units or maybe at 17,000 units. Even in the worst situations, I'm able to sell some 17,000 units. And normally I'm able to operate at 25,000 units. I would love to get into the business because I have pre-calculated that by selling 16,066.67 units, I will be at no profit, no loss. You want to see it? We can calculate it for you. 16,066.67 units. What is the total contribution you will be earning? 16,667 is going to be 1 lakh rupees of contribution. When you subtract the fixed cost from it, 0. Yes, thank you so much. So I hope now everybody is very clear with the concept of marginal costing. So marginal costing says, first thing which marginal costing says, calculate the variable cost of producing. Value closing stock also on variable cost. It says subtract total fixed cost. Total fixed cost. It says subtract total fixed costs in order to find out profit. This is the logic behind marginal costing, right? When we understand this, marginal costing gave us a lot of fundamentals. It says selling price minus variable cost we will call it as contribution. You people can keep on writing down. Total contribution is equal to contribution per unit into units sold. Into units sold. Thank you so much, Nandiswaran. Total contribution minus total fixed cost is equal to profit. So we can say contribution is equivalent to fixed cost plus profit. Then it told us how to calculate break-even. It says if you want to know the point at which no profit, no loss is there, you can simply do total fixed cost divided by contribution per unit. Or you can say at break-even, total fixed cost is equal to total contribution. I hope I'm clear. Everybody can please keep on copying this with me. along with me. So at break even, total fixed cost is equivalent to total contribution. Break even is a point where you earn no profit, neither you incur any loss. How do you calculate it? Total fixed cost divided by contribution per unit. Now, if I do not have information per unit, I have sales figure, I have total variable cost figure, then I will get total contribution because I have not been given information per unit. So can I find out a relationship between contribution and sales? Yes. That relationship between contribution and sales is known as PVR. That is known as profit volume ratio. Why is the name profit volume ratio, or you can say contribution divided by sales ratio? Because higher the contribution, higher is the profit. What do? Contribution divided by sales into 100 is known as PVR ratio. If we try to calculate break even now, same thing, total fixed cost divided by PVR, I will get the answer in currency terms, that is rupee terms, right? Okay. So till now, what all we have studied? We can just sum it up. Selling price minus variable cost is equal to contribution. Contribution is equal to fixed cost plus profit. We calculated break-even point in unit terms and in rupee terms. We learned to calculate the profit volume ratio, which was contribution divided by sales into 100. Yes. So my break even in unit terms will be total fixed cost divided by contribution per unit, or total fixed cost divided by PVR into 100. Let us check it out. Are we able to do it? Okay. Let me take up a small example, right? Let me take up a small example. Let us say the selling price is rupee 10. Let us say the variable cost is rupee 6. And let us say my total fixed cost happens to be 2 lakhs. Can we find out contribution? Yes, contribution would be 10 minus 6 is equal to be 4. Can I find out my PVR ratio? Yes, it will be 4 divided by 10 into 100, which is going to be 40%. Can I find out my break even? Yes, my break even would be 2 lakhs divided by 4 is going to be 50,000 units. Yes, at 50,000 units, I will break even. There'll be no profit, no loss. If I want to find out break even in rupee terms, I can directly do 50,000 into 10, which is going to be 5 lakh rupees. Or I can do 2 lakhs, which is the fixed cost, divided by PVR into 100. I will still get 5 lakh rupees. Yes or no? So break even is nothing but finding out a point where point at which there will be no profit, no loss. I hope I'm clear. So till here, everybody is clear. So we learned contribution is equal to selling price minus variable cost is contribution. PVR is contribution divided by sales into 100 is PVR. If you want to find out break even in unit terms, we will do total fixed cost divided by contribution per unit. If we want to find out in rupee terms, we can just divide it by the PVR ratio, or the break even units which we have calculated, we can multiply it with the selling price. Now, I have another question to ask you. Can I rub the board? If I say I desire to earn a profit of rupees 2 lakhs, and let us say my selling price is rupees 20, my variable cost is, let us say, 14, my total fixed cost happens to be 6 lakh rupees. Total fixed cost is 6 lakh rupees. So what do? My contribution is going to be 20 selling price minus the variable cost 14 is going to be 6 rupees per unit. Yes? Okay. What is the total contribution I desire? Contribution I desire. Contribution desired. Contribution desired would be, you need to cover up your fixed cost. So fixed cost plus the desired profit. Yes. So your fixed cost happens to be 2 lakhs and 6 lakhs, and you desire to earn a profit of 2 lakhs. So what is the desired contribution you are looking at? You are looking at a desired contribution of 8 lakhs. So how many units you need to sell? Units to sell, this desired profit would be 8 lakhs divided by 6. What is the answer which I get? 8 lakhs divided by 6. I need to sell some 1,33,333 units in order to earn this desired profit of 2 lakhs. Okay, so I learned another formula, or I learned another thing. That is, desired contribution is equal to total fixed cost plus my desired profit. Yes? So if I summarize, we can say if somebody gives me variable cost ratio would be variable cost divided by sales into 100. If somebody says this is 70%, then I know automatically my PVR ratio would be 30%. Why? Because sales minus variable cost is equal to contribution. Yes? Sales minus variable cost is equal to contribution. So if my variable cost percentage is 70, my PVR, my profit volume ratio, or my contribution to sales ratio would be 30%. We learned how to calculate the break-even. We learned how to calculate break-even in rupee terms as well as in terms of rupees. We learned that if I want to desire a particular profit, what do I need to do? Now here on this note, I would like to tell you one more thing, that is MOS, known as margin of safety. I would like to tell you one more thing, that is margin of safety. What does margin of safety means? So if I put in all things here, selling price minus variable cost is contribution. Total contribution at break-even point is equal to total fixed cost. PVR is equal to total fixed cost divided by contribution. PVR is equal to contribution divided by sales into 100. Break even in unit terms is total fixed cost divided by contribution per unit. Break even in rupee terms happens to be total fixed cost divided by PVR. Yes. If I desire a profit, then desired contribution is equal to total fixed cost plus desired profit. Units to get this desired contribution would be units to get this desired profit would be desired contribution divided by contribution per unit. This is all what we have studied till now, right? Now we are studying something called as MOS. MOS is total sales minus break-even sales. That is, margin of safety is sales after we break even. That means if my total sales is 1 lakh units and my break-even unit sale is 80,000 units, then my margin of safety will be 1 lakh minus 80,000, which is going to be 20,000 units. This is the meaning of margin of safety. Margin of safety means total sales minus break-even sales, right? We can also say after break-even point, contribution that I get is nothing but profit because all fixed costs are covered. After break-even, whatever contribution I earn is nothing but profit because all fixed costs are covered. I'm clearing my screen now. That means at MOS, total contribution is nothing but total profit. So we can say MOS is nothing but contribution profit divided by contribution per unit. Or you can say, if you want to find out MOS in rupee terms, it will be Okay, so we can say at MOS, profit is equal to contribution. Or we can write it down like this: profit divided by contribution per unit is going to be MOS in unit terms. Or we can say profit divided by PVR into 100 will be MOS in rupee terms. Yes or no? I hope I'm good. So putting everything together, we say we have learned sales minus variable cost is equal to contribution. PVR is contribution divided by sales into 100. Break-even point in unit terms happens to be total fixed cost divided by contribution per unit. Break-even point in rupee terms happens to be total fixed cost divided by PVR into 100. MOS is equal to total sales minus break-even sales. Or we can say profit divided by contribution per unit. I hope I'm clear. Or you want to find it out in rupee terms, it will be profit divided by PVR into 100. Right? This is the crux of the marginal costing as a topic. Now, are we able to do the sums? Should we now take up the ICAI sums? Right? So all of us should do it. I would like each one of you to start with the problems. Open up your text and let's start looking at the problems of ICAI, right? And I'm going to give you the homework, which I want all of you to do it. Let's look at the practical problems. Question number 1. Question number 1 of ICAI material. Question number 1 of ICAI material. Yes, Lalita, it got stuck, right? If PV ratio is 60% and marginal cost of the product is 20%, calculate the selling price. They have given me PV ratio is 60%. And they have said marginal cost is equal to rupee 20. What do you mean by marginal cost? Marginal cost means variable cost. Yes. So if marginal cost happens to be 20 rupees and they have given you PV ratio, I told you sales minus variable cost is equal to contribution. Yes or no? Now, if contribution to sales ratio is 60, then obviously this variable cost will be what? It will be 40, yes or no? Because 100 minus 60 is going to be 40. So that means variable cost ratio is 50%. So what will be the selling price? If 20 rupees is equal to 40%, what is 100? Because that 100% is going to be the selling price. So you can do that. Selling price would be, how do you calculate? How do you calculate 20 rupees divided by 40 into 100? 50 rupees is the selling price, right? Okay, this is the question. So with this question, what did we learn? That If PVR ratio is given to me in the examination, I can always find out the variable cost ratio, because selling price minus variable cost is equal to contribution. So if contribution or PVR ratio is 60%, then variable cost ratio would be 40%. Okay, let's take up the next sum. There are around 22 questions as far as ICAI material goes, right? Let's do it. Question number 2. The ratio of variable cost is 70%. Now, if VC ratio is 70%, this is the question. Everybody has got the same questions. Please tell me. They have to be the same because I'm using the PDF, the latest PDF which all of you have. This is question number 2. Problem question number 2. If PV ratio is 60%, if the variable cost ratio to sales is 70%, then can all of you tell me what will be the PVR ratio? Can all of you tell me what will be the PVR ratio? You can refresh and see, because I think the screen is stuck here. I can't see the students again. So we will log out and log in again. Yes. Okay. Right. So perfect, Vrinda. PVR is going to be 30%. Thank you. Now I can see you people being there. Now the break even occurs at 60% of the capacity sales. So they say BP is at 60% of the sales. Right? Okay. Find the capacity when fixed costs. Find the capacity sales when fixed costs are 50,000. Fixed costs are 90,000. So your total fixed cost given is 90,000. Yes. Okay. Also compute profit at 75% capacity. Now already ICAI has made everything clear, right? Everything clear. We have the fixed cost. We know BEP is at 60%. We also know the PVR. So can I find out my break even? My break even would be 90,000 total fixed cost, right? This is the total fixed cost is 90,000. I divide this by PVR. So if I divide this by 30 into 100, what do I get? What do I get? Let me do it. I don't want to do any 3 lakhs. This is my break-even point, and they have said break-even is 60% of total sales. That means what will be my total sales? What will be my total sales? Total sales will be 3 lakh divided by 60 into 100. So how much does come out to be? 5 lakhs. 5 lakhs is my total sales. So can you see this is more like a puzzle. When you play a puzzle, then this is a missing figure. You should know the connection between two things. If you know the connection between two things, you'll be able to solve. That's what marginal costing is all about. One important thing about marginal costing is you should understand the concept. That is, what is the difference between absorption and marginal? How did marginal costing generate? How does marginal costing helps us to take decisions? All that we need to understand. After that, trust me, once you understand the logic, then sums of marginal costing are very simple. Okay, next they have asked us that what is going to be your profit at 75% of the capacity. So 75% of sales is how much? 75% of the sales is how much? 75% of the sales would be 75% of 5 lakhs is how much? Can you tell me? 5 lakh into 75%. 3 lakhs 75,000 is 75% of the sales. Okay. Can we find out the applying by PVR? Can I find out total contribution at 3,75,000? Yes, 3,75,000 into 30%. So it will be 3,75,000 into 30%, which comes out to be 1,12,500. What will be the profit? 1,12,500 minus my fixed costs, which were 90,000. So what is the profit? 22,500 rupees is the profit. You know one thing, you keep on finding out the next things. Okay? Okay. Can we take up the next question, please? Right? Okay. Can we take up question number 4? I would like by next class, still there are 20 questions, I think, till question number 13, everybody should complete it. Right? Perfect, Mancha. Question number 4. Let's take up question number 4. Right. Question number 3 is easy. A company has made a profit of 50,000. So currently the profit made by the company is rupees 50,000 during the year 1920. If the selling price and the marginal cost of the product are 15 and 12. So selling price is 15. Marginal cost means variable cost is 12. So I know my contribution happens to be 3 rupees per unit. Find out the margin of safety. They say, tell me what is the margin of safety. Can we do that? We have the profit of 50,000 given to us. Right? Can we do that? Can we do it? At margin of safety, profit divided by contribution per unit. So profit is 50,000. Contribution is 3. So can I get out with margin of safety, which they're asking me? Find out the amount of margin of safety. Yes, we have done that. That's all they have asked. Can we look at question number 6? Can we look at question number 6? Or we can look at question number 5 also. Can we look at question number 5? If the margin of safety, they say if the margin of safety is 2,40,000 rupees, which is equivalent to 40% of sales. So don't you think the first thing I would like to do is I would like to find out my total sales. So if 2,40,000 is 40%, what will be 100%? That will give me my total sales. So 2,40,000 divided by 40 into 100. My total sales is 6 lakh rupees. Right? Now, 6 lakh rupees. Now they have given me my PV ratio is 30%. PV ratio is 30%. Calculate the break-even sales. They say, can you tell me the break-even sales? Yes. First of all, I can directly calculate. I don't need to put in the formula because I know 40% is MOS. Total sales minus MOS sales will be my break-even sales. Yes or no? So if total sales is 6 lakhs and my MOS sales is 2 lakh 40,000, that means 3 lakh 60,000 rupees would be my break-even sales. Yes. Okay. Okay. Yeah. Thank you so much, Shobha, that you like my way of teaching. Trust me, that's the best compliment any teacher can get. Okay, now, so they have said break-even sales. They have asked me. Second is the amount of profit on sales of 9 lakhs. Okay, profit which I'll be earning on 9 lakh rupees of sales. Okay, guys, do we need to find out my break-even? Since I know the rupees, I would like to know my fixed cost, right? Because I would be needing it for my next question, because the next question says that at 9 lakh, what is my profit? So for my profit, I need my fixed cost. So since I have the break-even point ka figure, I have the PVR ratio. Can I find out my fixed cost? I will. So break-even is 3,60,000. Which is equivalent to my total fixed cost divided by my PVR, which is 30%. So can we say what is my total fixed cost? Can we say what is my total fixed cost? Yes, we can. My total fixed cost is going to be 3,60,000 into 30%. Yes. 1,08,000. 1,08,000 happens to be my 3,60,000. 3,60,000 into 30% is 1,08,000. Correct. Correct. Right? So I know my fixed cost. Now they say what is going to be my profit if I make a sale of 9 lakh. If I make a sale of 9 lakh. Okay. If I make a sale of 9 lakh rupees, then my contribution I can find out. It will be 9 lakh sales into 30%, which is going to be how much? Which is going to be 9 lakhs into 30%, which is going to be 2,70,000. Now from this, I'm going to subtract my fixed cost, which is going to be 1,08,000. I'll get out with my profit. So it is how much? 2,70,000 minus 1,08,000. 1,62,000 profit. Okay. This is part A. Can we do part B? Okay. Let's do part B. Let's do part B. Okay. Let me find the question. Part B. X Limited has earned a contribution. X Limited has earned a contribution of 2 lakhs. This is what they are telling me. X Limited has earned a contribution of 2 lakhs. And net profit of 1,50,000. Okay, this is what they are saying. Of sales of 8 lakhs. They are saying what is the margin of safety? Okay, can we find out our PVR ratio? Can we find out our PVR ratio? It is going to be 2 lakh, which is contribution, divided by 8 lakhs into 100, which is going to be how much? Which is going to be how much? 2 lakh divided by 8 lakhs into 100 is 25%. MOS at MOS, contribution, total contribution is equal to total profit. Total profit is 1,50,000. If I divide this by 25 into 100, I get out with my MOS sales, which is 1,50,000 divided by 25 into 100, right? Which is 6 lakh rupees. Am I good? Yeah? Okay. Can we take up one more sum? Question number 6. Can we take up one more sum? Question number 6. Before I solve this sum, I give 2 minutes to all of you to do it on your own. I give 2 minutes to all of you to do it on your own. And tell me, do you get the answer? It says it sells a product. The selling price of the product is 15 per unit. This is what the question says. In a period, if it produces and sells 8,000 units. If it produces 8,000 units, they say it incurs a loss of 5 rupees per unit. If the volume is raised to 20,000 units, okay, they say if you raise it to 20,000 units. Thank you so much, Lalita. It makes me feel happy. If the volume is raised to 20,000 units, it earns a profit of 4 rupees per unit. Calculate the break-even point in terms of value as well as units. Okay? Let us try doing it. Okay? First, if the selling price is 15 and you incur a loss of 5 rupees per unit, that means the cost should be 20. Just a second. Okay. Why did I do that? This you have done in grade 6th or 7th also. Selling price minus cost plus profit is equal to selling price. Yeah, if there is loss, what will you do? That means your selling price plus loss will give you the total cost. Yes. Okay. So I do that only. So if my loss is 5 rupees per unit, my selling price was 15. That means my total cost was 20 per unit at 8,000 units. Yes. So my total cost is going to be 8,000 into 20. How much does it come out to be? How much does it come out to be? 8,000 into 20. ₹1,60,000. Similarly, I have been given a profit. If selling price is 15 and profit is given to me 4, that means my cost per unit will be 11 at 20,000 units. Yes or no? At 20,000 units, my cost is 11 rupees per unit. So that means my total cost is how much? 11 into 20,000, which comes out to be 2,20,000 units. Now, friends, you have got 2 points. One is 8,000 cost is 160. 20,000 cost is 2,20,000. Now, guys, please tell me what could have been the reason of difference in the cost? What could have been the difference in the cost? The difference in the cost is because of variable cost, yes or no? Because fixed cost remains constant. The difference in the cost is because of a variable cost. Fixed cost remains constant. So, difference in cost is how much? 2,20,000 minus 1,60,000, which is 60,000. Difference in cost is how much? Is 60,000. What is difference in units? Difference in units is 12,000. 20,000 minus 8,000. Yes, I repeat. Difference in cost is coming because of what reason? Difference in cost is coming because of just a second. Right? So difference in cost is 60,000 and difference in units happens to be 12,000. And we said that this difference in cost can only come because of variable cost, because fixed cost remains constant. So can I get out with my variable cost per unit? Yes. So my difference in cost was 60,000. My difference in units was how much? 12,000. This was 20,000 units minus 8,000 units. And difference in cost was 2,20,000 minus 1,60,000. Yes? So that means per unit variable cost is how much? It is 60,000 divided by 12,000, which is 5 rupees per unit. So I can find out my contribution. Selling price is 15 and my variable cost is 5. So my contribution is 10 rupees per unit. The contribution is 10 rupees per unit. Yes. Now, what is my total fixed cost? Can I find that? Also, this you have learned it in your first chapter, wherein you were told to differentiate between fixed and variable. Can I find that? What will be my total fixed cost? At 8,000 units, variable cost is 8,000 into 5, which is 40,000. My total cost at 8,000 units is 1,60,000. So total cost minus variable cost is going to give me fixed cost, which is how much? 1,60,000 minus 40, which is going to be 1,20,000. I repeat, my total cost at 8,000 units was 1,60,000. My variable cost per unit happens to be 5 rupees per unit. That means what is my total variable cost at 8,000 units? It is 8,000 into 5, which is 40,000. So this is my total variable cost. This is my total cost. So can I get out with my total fixed cost? Yes, it is 1,20,000. Can I check my answer? Is it correct or not? We can do that. We can do that. How? We can just apply it on 20,000. Do that. Total cost on 20,000 units was 2,20,000. Total variable cost on 20,000 units would be 20,000 into 5, which is going to be what? 1 lakh. So what is your total fixed cost? 1,20,000. Yes? Now guys, my question is easy. I know my fixed cost, I know my contribution. So what is my break-even point? Break-even point is 1,20,000 divided by 10, which comes out to be 12,000 units. At 12,000 units, I am break-evening. If I want to find it out in rupees, I can do 12,000 into 15, which will give me 1,80,000. Yes, or I could have calculated the PV ratio and given the answer. Now guys, there is an emergency in my family, right? And anyways, we have come to an end of the session, right? And we will be doing in our next class, which will be on 20th on marginal costing, we'll be doing one aspect of marginal costing, and that will be limiting factor. We'll be touching upon few more sums. So if I give a crux of what we have done today, we have learned the difference between absorption and marginal. We have understood the difference. We have learned selling price minus variable cost is contribution. This is for marginal costing. We learned the concept of break-even point in rupee and unit terms. We learned the concept of MOS. We learned the concept of desired profit. And we learned that what is the benefit of marginal costing, that it helps us to take decisions. Yes. We try to do certain unsolved sums of ICAI, right? And on this note, I would like to put an end to my class. We will be meeting on 20th. I would request all of you to go through the study material of ICAI. Try to complete sums till question number, unsolved sums till question number 12 or 13. ICAI has touched upon every possible aspect which ICAI asks. So you don't need to do anything extra if you do the sums of ICAI itself. So please do them. So we'll meet you on 20th for the last part of marginal costing. Thank you so much. It was wonderful teaching you. Thank you, Shaurya. Thank you, Lalita. Thank you so much, Shashi, Lalita, Shaurya, Mansha, every one of you. Thank you so much that you enjoy learning from me. Thank you so much. See you. Have a good day. Hanji? Hanji, conclude.